Okay, welcome to this new questions and answers webinar for November 5th, 2019. You know how we are going to do it, how it works. So I'm going to start with a chart. I've got a list of assets here on the right side on my watch list to go over in this webinar. But if you have any particular specific question or asset you want to look at, it would be great that you type it in the chat box so I can go over it. So remember to be very specific with your questions and timeframes when you are asking me a doubt or anything, okay? Because it's very difficult to try and read your mind. Haven't learned that yet, okay? So, having said that, let's go over the euro dollar, okay? So this is interesting setup because we still have a bearish bias on the monthly. Okay, we have this bearish engulfing pattern over there. We have now a bullish engulfing pattern on the monthly, but look what we have here. Hello, has okay, could be great in the stream. Okay, Andres is asking about Haas. I think Haas is Hasbro stock probably. I'm not sure. I think it's that one, Andres. Hola, Ocean Driver. Okay, correct. So I'm gonna add it here. Hasbro. So I'm gonna analyze this one after the euro dollar. Okay, good. So even though we have new areas of demand on the euro dollar, we have a bearish bias on the monthly. Okay, we have one supply created, one, two, three bearish engulfing patterns. So no longs should be possible unless you are taking counter trend longs. Okay, we hit our 3 months every demand. So since we have 3 months every demand in control, the anti time frame for the 3 month sequence, okay, is the weekly. So we have a weekly area of demand over there. So that is where we will be allowed to go long again now. All the way up, we have had opportunities to go long, but no retracement to these daily areas of demand. And now what is going on? We have again weekly, the daily out of alignment. This one great would have been great over here to go long counter trend, that one as well, but it made the trend line confluence and it did not retrace back. Now that price is dropping again, remember bias, we have brand new area of supply created. We can't go long over there. Make sense? That's the realignment rule. We have daily out of alignment. We cannot go long at daily imbalances like this one unless they are nested within a bigger time frame area of demand than the daily, which is the weekly. Okay, so as you can see here in the weekly, we have 3 candles, okay, and we have complete balance on the one. Let me maximize it. We have a drop, a rally, and a drop. And it is interesting. Can anyone tell me what can you tell me about this? The latest candle here, the red one. Obviously, it is a bearish engulfing pattern being formed. But if you compare the red candle with the white candle over there, what is the difference? It's a bearish engulfing, okay? But what is the difference between this one and this one? Remember, this is a weekly chart. Every single candlestick here represents a week of time. So what is the main difference between this one and this one, the red one and the white one? Apart from being an engulfing, okay? But there's something related to time. That's a tip I'm giving away, okay? Yet, short opportunities right now, Ocean Diver. Anyone about this one? TechPal, you are there? Exactly. Andreas said that. Today is Tuesday, beginning of the week. 2 days versus 5 days. Correct. Correct. So this candle over here, the white one, took 5 days, okay, to be formed. Whereas this one is already stronger than the previous one and only 2 days have passed since the week started. So this is clearly telling us that even though we have balance on the weekly, we have bearish bias. Make sense? So we have the monthly with a bearish bias, and also the weekly now. We have the monthly and the weekly with a very bearish bias. So short and new areas of supply. Okay? So what do we have here? Brand new area of supply on the 4-hour, brand new area of supply on the daily, and another even stronger area of supply created on the 4-hour, responsible for eliminating this tested used up area of demand. So right now the only thing we can do on the euro dollar is to go short. We were waiting for a bigger retracement. Why? Because we have the 3 months area of demand in control, single candlestick over there. After that, we got an engulfing pattern. Okay, so after a very strong decline, we are expecting a bigger retracement. That retracement already happened. Okay, so now it's time to go short again. Yes, we can go short Ocean Diver on the 4-hour area supply if the market conditions continue like this. Okay, but weekly will not consolidate away, but we have this engulfing pattern. Okay, that's one of the confluences to go short of. Okay, so it's worth the risk, and we have the confluences: 20 MA confluence, engulfing pattern, bearish bias on the monthly, bearish bias on the weekly, new supply on the daily, new supply on the 4-hour. I mean, what else? Okay, what else? I mean, it's worth the risk. A very strong impulse. We have these area supply 2 ESC candles, which is the minimum requirement we want, and everything's there. And how do you score the supply zone on daily? Right now, how will you score it? Let me answer you with the same question, Anwar. How will you score it? The basing, is the basing okay? 0 or 1? Good base. Departure, imagine that the daily closes right now. It will close because it's just maybe 1-2 hours before Tuesday kind of closes. Okay? Consolidation away. You tell me, this impulse consolidate away? Anyone? Anwar, you tell me. You are asking the question, so you should know if that consolidated away or not. So, did that impulse consolidate away? Tomorrow. Well, tomorrow is today. I mean, we have the basing there. We have one full candle. So by the time, if the market were to close right now, we would have the consolidation away. So at the end of today, probably 1-2 hours after the daily closes, we are going to have consolidation away. This 4-hour area of supply is nested right at the interchange zone, so it's great for shorts, and there is a lot of room for price to drop. This is very bad price action. This is already tested, so price has room for to drop all the way down there to the weekly area of demand, where longs will be possible again in confirmation. Okay. Ocean Diver so far will be great for shorts. Yes, right now it is great for shorts. Okay, longs are not allowed. Counter-trend longs were possible here and there in a daily uptrend, but now the daily is out of alignment with supply area created and a long-term short bias. Good. Yeah. Any other question about this one? So we can switch to another one. Okay. Good. Great. So let's now switch to Hasbro. Okay, which is this one on. So I'm going to switch to the 3-month sequence because that's what Andreas suggested me. So I'm going to use this one. So 3 months, monthly, weekly, and this one should be the daily. Good. So what is the question, Andreas? Can you tell me? Okay, I'm going to start drawing the levels while I wait for Andreas' question. How to handle the massive drop? Well, that probably is an area of supply created. So we have a 3 months uptrend. Okay, we have an area of demand eliminated. So we have an area of supply created right there. Okay, here another area. Okay, over there on the weekly and on the daily as well. So right now, what do we have? What is your sequence, Andreas? 3 months, monthly, weekly, I guess. Yeah, okay. So if the 3 months, if we take a look at the 3 months alone, which is the time frame that dictates our bias, what is the trend? All-time highs broken. Okay, so we have an uptrend with demand being created over here. 1, 2 ESC candles, very strong impulse. So we are expecting price to drop all the way down there where longs will be possible again. So that's the 3 months is telling us going long at 3 months area of demand. After such a strong impulse, we're waiting for a bigger retracement. Those are the rules. On the monthly, we have a monthly area of demand that has been eliminated on the expectancy that price is going to drop all the way down to the 3 months area of demand. Okay, so that over there we have a weekly area of demand broken, overshot, pausing. Potentially this is going to be created another ESC candle, one of those magic candles. So we have weekly is already in a downtrend. Why? Because we have demand over there. Well, it's even here. One sec. Demand is here. All-time highs broken. So supply created over there, demand created over there. So that one over there is the one eliminated. So demand eliminated, supply created. Weekly is in a clear downtrend with a very strong supply zone. One single ERC candle that is wider than the average ERC candle, so it's great to go short there. What do we have in the daily? Daily area supply. So great. Let me read your questions. Ocean Diver, monthly, middle of it, time frame is out of alignment. Can we short a weekly? Yes, we can go short. This is counter trend on the 3 months sequence. It is a consolidation stage on the monthly, and it is a valid trade on the weekly sequence. It all depends on your sequence. If you are trading the 3 month sequence, longs are 3 months area of demand. If you're trading the monthly sequence, month is out of alignment, okay, shorts higher in the range, longs low in the range. You are trading the weekly sequence, then shorts a weekly area supply, daily area supply, and the 4-hour area supply, there's nothing over here, so it's over there as well. So it all depends on the sequence. Longs and shorts, shorts. On the daily sequence, daily 4-hour, 1 hour, short bias. Okay. Okay. Andreas, could we go back in time the day before the drop? I can do it on which time frame, because we cannot go at once on all 4 time frames. That's a feature I have requested to TradingView, but they are not adding it. So which time frame you want to use to go back, Andreas? The weekly, probably. Question is, before drop, wouldn't there be a demand on which time frame, Andreas? Demand on 95, 94? Which time frame are you referring to? Weekly? 95, 94. This one over here? Is that the one bullish impulse that you are? Yeah. So is that demand? Let me see. That's the one. So here, as per the rules, we have this trend line break, a valley here. Let me zoom out. Valley, valley, that is supply as per the rules. So, which is the imbalance or impulse responsible for breaking that area, Andreas? Is it this one, which is 1? Anybody can answer, or is it this one, 2? Which one of those? Ocean Diver says 1, Suele tu Gumbi says 2, Freddy 2, Andreas, it might be 2. Well, might is something that is not allowed in any, mm, or shouldn't be allowed in any strategy, in any logical and objective strategy. It is or it is not. It cannot be might. So we can see here that we have a rally, okay, rally, basis, and then rallies. So this is the impulse responsible for eliminating that area of supply. This one is not. This one tried to, but it couldn't. So we don't have supply over there. So it should be 2. It cannot be might or I think. It is or it is not. So supply, demand eliminated, okay? Supply created, demand created over here, supply created. That's the chain analysis. We can draw it. This is supply, then this is demand responsible for eliminating that one, and then this is supply for eliminating this one. All this, where is all this happening? It's happening after a very, very strong impulse. So expecting price to retrace all the way down. Same here. Okay, we have the same scenario here. Let me do this. Let me use the replay functionality and do this on the 3 months chart. Okay, so we have 3 months uptrending, new very strong impulse on the 3 months chart. Okay, so what are we expecting? We are expecting price to retrace all the way down to the area of demand. 1, 2 ESC candles. So what happens? Now if we continue to go further, okay, I don't know how to go one by one candle. Haven't learned that yet. So come on, stop. Good. I need to, okay, so a strong impulse, okay. By the time price reaches the interchange zone, we have a bearish engulfing pattern. We don't want that after a very strong impulse. So we are expecting price to go where? Down to the 3 months area demand. And from there, what happens? Strong rally. So now what do we have? Again, on the 3 months chart, we have another area of demand, another very strong impulse made of 2 ESC candle. Doesn't this impulse look like this one? Same thing. In this case, we have 3 candles. This one, in this case, we have 1 candle, 1, 2 ESC candles, 1, 2 ESC candles, bearish engulfing pattern, bearish engulfing pattern. So that's what we are expecting. Make sense? That's the analysis on the 3 months chart. So now counter trend shorts are possible. Why? Because we have engulfing patterns on the monthly. We have supply created, demand eliminated, supply created on the weekly, very strong impulse, much stronger than the bullish impulses. So, I mean, longs, no way. Okay? No way. Andreas, anyway, what I was after, let's say that we would have been at demand 95, 95, 94, 98, sorry, and it would drop that hard, and you would have had an order in there. Would you cancel the order? I mean, I wouldn't have had an order over there. You shouldn't have an order over there. Why? Because the 3 month sequence, which is the one that you told me that you are trading, is telling you that we are waiting for a bigger retracement. So having an order there is not allowed. Yeah, I know. Andreas, he's saying that it's for the sake of argument. How to handle those such big moves? When you have such a big move, you can do 2 things. Go long at the area of demand in your top time frame sequence, or, well, 3 things really. Go start thinking of counter trend shorts if the imbalance is strong enough, like in this case, or do nothing and swipe this one left, and that's it. Or as Alf Johansson said, do nada. I mean, do nothing. So there are 3 possibilities when you are looking at this scenario. You can patiently wait for price to retrace to that area because the 3 month sequence is your your sequence, long bias. You can start thinking of going short, counter trend, okay? Or Do nothing. You just go to another asset. That's all you can do, really. But as you can see here, very strong impulses, very bearish gap unfilled, nested within the weekly area supply, so it's great. Probably news based. Yeah, news based. So great. Okay, good, good, good. So longs will be possible again down there because we have a monthly area of demand nested within 3 months area of demand. Okay, origin of the move as per the wow. So we've got an area of demand over there. Still lots of room from 100 to about 86. So that's the way to go right now. Counter trend shorts, longs lower at 3 months area of demand. What happened in the past with the news? Let's see. When price was at the top, at the very top over there, well, we had great news, positive, and it dropped. Here, we had great news, it dropped. We had here bad news, it dropped. Okay, here, bad news, it rallied. So news, I don't care about news, my friend. Don't care. What I do care is reading price action and identifying the impulses, strong impulses, and learning if those impulses have been created at the beginning of the move or after a very strong move, and scoring those imbalances according to my sequence. So in this case, we have an area of demand here eliminated after a very strong impulse. This is not demand. This is just an impulse that tried to become demand, but it couldn't. It was over there. So now we have bearish impulses being created, short bias on the monthly and weekly sequences. On the 3 months, you have to patiently wait for a bigger retracement. Since there are hundreds, if not thousands of stocks, well, this one, you set the alert and wait. That's it. Okay, good. Okay, good. So everything good on this one? Any more questions about Hasbro scenario that Andreas brought to my attention? Okay, good, Andreas. Perfect. If you have any other suggestion or any other asset, just let me know. Okay. So I'm going to continue with SPY, which is the ETF for the S&P futures. So I'm going to switch to the monthly sequence, and then the weekly and the daily and 4 hour. Okay, good. So what do we have here? I wanted to also take a look at this. Let's go take a look at the S&P 1 sec, because I want to capture this one on the weekly. Instead of using a template with a different template, I'm gonna use my good old friend Ying, and I'm going to compare this. Okay, good. This is what I want to bring to your attention right now. On the S&P, which is the ETF for the S&P E-mini futures, we had a weekly area of supply that we were expecting to be eliminated because we have a long-term long bias. Look at that, long-term long bias. Okay, so that one was reached over there and it was broken, overshot. And what happened? We identified the impulse that was responsible for eliminating that area. It wasn't over there. We have to go back, okay, in time and left. And this is the impulse made of two ESC candles. The origin of the move is over there. It broke over there. So the entry on the weekly sequence is down there. Price reaches the weekly area demand, bullish pink candle, another pink candle, engulfing pattern, and then it doesn't look back. Make sense? So that's on the SPY, okay, which is the ETF for the S&P E-mini. All time, okay, let me read you. Okay, and we're on bullish, okay. See, could you take a look at Wow Trades, please? Well, we're gonna be taking a look at them, okay. The Wow, we already saw a couple of them. All-time highs, Ocean Diver. Rules say long at daily average demand. Yes, on the monthly, weekly, daily sequence. I'm going to go over that right now. Ocean Diver, but sometimes I got scared by steepness of the move at all-time highs. Yes, you are human, like me. So that's part of the game, being afraid of taking a trade because of the steepness of the move. So here we have a strong rally, and when you look at the weekly approach in that area, I'm probably most of you will be thinking, oh, well, no, I'm not going to go long because this and that, a strong move on the way down, bearish engulfing patterns there, supply being created. No, no. But that's what the market has to do in order to retrace to your entries. Always, no exception. If you're going to go long, price has to retrace. The fastest, the faster it retraces, the better, because on the way down there will be no sellers interested. So on the way up, it will rally without any obstacles. So here on the SPY, we have supply eliminated, demand created. That's the long. But if we take a look at the S&P E-mini futures, price rallied into that area, same area over here. Okay, very similar, but it couldn't break it, so we wouldn't be able to go on there unless confirmation happened. So it depends on which symbol or asset you are trading or broker as well, because on Forex we have unfortunately an unregulated market where each broker will decide how to draw the candles, let's say, quote unquote. Okay, they are not drawing it, but they are intervening. I mean, they are taking action doing that. So we have that we can go long over there, set and forget, but we can go long there, set and forget. So it depends on which asset you are trading and the broker that you're using, then you will be able to go long or not. So in this case, we have now on the S&P, we have the weekly average demand that we would have loved to have here. By now we have it over there. 2 ESC candles created. So we are expecting now for a bigger retracement, or if you are trading the more aggressively, longs at the daily area of demand over there. Okay? Longs over there at the daily area of demand, else longs at the weekly area of demand. Make sense? A new area demand is created over there as well in the weekly. So long bias is the only way to go right now on S&P. We've been talking about this scenario for quite a long time, for weeks, months. I was saying specifically, we are expecting this area of supply to be eliminated on the weekly, on the monthly, and all that. It may take some time. I'm referring. Let me take a look at the S&P E-mini. It couldn't happen, and then dropped all the way down, then longs all the way up. So longs are near to demand like this one, more conservatively at the weekly area of demand. Ocean Diver on your ES chart on Jing, if this weekly become a great bear engulf, would it still be valid long on the daily, you mean? If we have an engulf here on the weekly? Yeah, but yeah, obviously. No, no way. I mean, if now imagine that price starts dropping heavily, forming a potential engulfing pattern. No way. We shouldn't be going long over there. Okay? So pay attention to that. The higher probability trade is over there, but right now you should be paying close attention to this. Anwar, are you happy with consolidation of the daily here? Why should I be unhappy, Anwar? It's consolidation away. Happen over there. We have 2 ESC candle, consolidation away with 2 candles, so it did happen. Okay? It did happen. That's all we need to know. Did consolidation away happen? Yes or no? It did. Did it create any area of demand? Yes, it did. So, like this one over here. Consolidation away happened with 1 and 2 candles. So, it was responsible for eliminating this tested area of supply. So I shouldn't be happy or unhappy. It's just another imbalance. Okay? No emotions involved. Good? Any questions about this one? Okay? Good. So let's take a look at wow trade, okay? Because C uh, asked about it, and on all this one, I remember that Hang Seng, I think I had Hang Seng over here. Yes, had a wow trade. Okay, so we have the monthly consolidating over there. Okay, brand new area of demand has been created. This was mentioned in the community for months when price was over here. Consolidation happened, consolidation away. So we were waiting for what? For price to retrace to the monthly area demand. But since the month is consolidating, we were waiting. We have to wait for what? Monthly consolidating, new area of demand. Okay, demand in control, so new area of demand. So if we are using the monthly sequence with the monthly chart being our top time frame, what is the anti time frame for this sequence? The monthly sequence. The daily. Great. Perfect. So we should be looking for what? We should be looking for new areas of demand on the daily time frame. So after we have price reacting or reaching, sorry, the monthly area of demand, okay, let me take a look at the daily, okay, over there. So we have that one over there. Let me do this. Let me place a horizontal, vertical line and right mouse button sync to all charts. So this is where price hit the monthly area of demand, okay? I'm going to do this as well. I'm going to use a horizontal line over there and sync it to all charts. So now we have the cross here on the daily and also on the weekly. So what do we have here? Do you think we have an entry on the chart on the daily or not? Anyone? By just looking at the daily chart over there? Do we have an entry? And what type of entry is it, if there is any? Alf Johansson said, yes, for sure. Yes, we do. Wow, long. Frederick said that as well. So we have here drop base, drop base, drop base, overextension. Since we have overextension, we have the trend line break. So the wow is just an impulse strong enough to break a trend line and consolidate away with 2-to-1 imbalance, and that's it. That's all we need. So that's an imbalance created of the monthly area demand. This black line represents the monthly demand proximal line. Okay, remember what I did here? So that's the monthly. The first time price reaches that area, it reacts, creates an area of demand. This was called in the community, I remember that, rallied to ESE. That's all we need. So if we want to score this imbalance, basing is good. Consolidation away happened. The strength of the impulse, great. Fresh. Now, bigger time frame, monthly demand area in control, fresh area of demand. So what else do we want? This is a wow trade, C. Okay, is that the way you pronounce your name? It's CEE, so I guess it's C. All good? That's a wow trade. Crystal clear and well said. So that's what we want. So now, if you are a short-term trader or you are a scalper, hopefully you won't. Okay, but most traders in the world are doing that, intraday, scalping, and all that, and they are not paying attention to this. They don't even know what an imbalance is, and they don't know where they are. So we are at a monthly average demand, so they are obviously looking, if they are lucky, they are looking at the, lucky enough, they are looking at the daily time frame as the biggest time frame they've ever seen. That's the biggest time frame. Okay? But we as swing traders and supply and demand traders, we know about the sequence, we know about the imbalances, and we know that when a bigger time frame gains control, hey, stop going against it. Okay? Sometimes we just go through it and eliminate it, obviously. But what do? Consolidation rules. Wait for a new area of demand, and that's a new area of demand where everybody else will be looking to go short. Okay, so 2 days pass, consolidation wave happens, and then as an intraday or scalper, you are thinking, oh wow, I'm gonna buy. All the indicators are telling you buy, buy, buy. No, my friend. After a strong rally, we are waiting for a bigger retracement because the longer term bias is short, okay, and people is not looking at these imbalances. So the inertia of the market is bearish, still bearish, but we can see now professional traders buying. So that's the reason for the wow. Okay, that's why the wow works so great. Okay, see, would you buy the pullback after the wow move? That's the pullback. That's where you buy. That's the rule for the wow. This is an area of demand. The proximal line is located around this area. Okay, so you buy there and you place a stop loss 25% underneath the lowest low of that impulse. Make sense? That's the way it is. Those are the rules. They haven't changed in years. Good? See? That's the way it is. So now, okay, that's what happened on when price reached that monthly area of demand. So what happened also, that was a weekly area of demand, right? Okay? So what happened over there? That's the first trade over there. So price rallied again for a counter trend short over there. It fell short of retracement to that area and started to drop again and hit the monthly area of demand again and created the bullish engulfing pattern of monthly and weekly areas of demand. So what do we need to do, okay, here in order to go long on the based on the weekly area of demand and the monthly area of demand if we are using the monthly sequence? What should we wait for? Anyone? Wow long. On which time frame? Ocean Diver and Anwar? On the daily, because we have the monthly area of demand in control. So now let's see what happened, because I remember I called this trade as well. And I believe Kiwi Forex from Indonesia, Jakarta, he took that trade. I believe he did, or Lion 89. I don't remember very well, but some people took that trade. So we are over there. So let's do the same thing. We are going to use a vertical line over there. I'm going to sync it to all the charts, and I'm going to draw a horizontal line over there and sync it to all the charts. So now on the daily, we're going to look at what happened over there. You see, monthly demand gain control, weekly area demand gain control, price dropped, and there is the imbalance. Very strong imbalance, 1, 2 ESC candles. I'm going to delete this, okay, for the sake of clarity. But this is not a wow. Or is it a wow? Is it a wow or not? The one that you drew here. This one over here. Why is it not a wow trade, Anwar? Jay said it is. Anybody else? Jay says overextension. It is overextension. Ocean Diver, it is a wow. So let's read price action. It doesn't really matter. That's my answer. Why? I'm going to explain. Okay. So we have drop base drop, drop base drop. Is that a drop base drop? Let's read price action. It's a drop. This is a rally. We just cannot have that bullish pink candle. So it is a rally drop. Okay. So it is a peak, not a CP, one of the tricky ones. But it doesn't really matter. Why did I say that it doesn't really matter? Let me zoom out so you can have more clues why it doesn't really matter if this was a peak or a CP. Why doesn't it really matter? Why doesn't it really matter? Why is this demand? Imagine this is a pause. 3 CPs, okay, but why? But look left. What do we have here? Let me draw this. Don't we have a peak here and another peak there? Don't we have an area of demand over there? Wasn't it broken over there, right there? So where do we have supply? So by looking at the chart, since we have a daily average demand over there, we have to go up and left. So this is the latest impulse. It means that this is an area of supply responsible for eliminating this area of demand. It doesn't really matter if this is a peak, a valley, a CP, or a Zeppelin. It doesn't really matter. Okay? Because it is a bearish impulse as strong enough, well, strong enough to eliminate an older area of demand. So that's the chain analysis. Okay? So it doesn't really matter. That area of demand is nested within a weekly and monthly areas of demand, bearish if with very strong impulse, and that's a retracement. And some of you took that trade. Another area of demand was created, no pullback. Another area of demand here has been created, but it doesn't look that it's going to retrace because it's pausing after strong impulse, after eliminating this area of supply. And when that happens, usually it will pause and then rally again. Else, going long there is the way to go. Make sense? Does these all make sense? Okay, those are the rules. Okay, there is nothing being made up real time. Okay, now it is, now it is not. Now I doubt, now I don't doubt. No, the rules are like that. The chain analysis, the wow trade, the impulses, consolidation away, scoring, blah blah blah. All that is written on paper in the lessons. It's up to you to take the trade or not, to apply the rules or not, to share your analysis with us for feedback before you take the trade. Up to you. Anybody else? No, nobody else. It's all up to you. Ocean Diver, Alf Johansson, the pin bar. Which pin bar you mean, Alf? This one over here. You are referring to that one? Yes, that one is tricky, but that one gives us a clue. Why is this pin? Can anybody tell us or tell me or the audience? Why are we having this pin candle? Hey, why now and not here or there? Why there? It's easy because we have a bigger time frame area of demand. If you are looking at the daily alone, you are lost, you are blind because you don't know where you are, the location of that impulse. So where are we? So let's use the crosshair. Look where we are, right there. So that's why we are having those pink candles, because we are within a bigger time frame area of demand. Those traders out there, I've read about them, they are trading pink candles on the daily and the weekly, and they are trading like the retracement to half of it or something like that. They would have had a loss on this one, okay? Because a pink candle is just a reaction to something on the left. It's not it's not an imbalance itself. So this is also giving us a clue about the strength of this imbalance. What is it telling us? Can you tell me? We have that imbalance. It is weak. Why? Because we have, as Ocean Diver said, we have this. We have, if we wouldn't have had these pink candles, then the basing would have been great. Okay? Pretty great. But since we have that pink candle, not good. That's great for longs, really. Okay? Because this is very weak. But if we draw the level correctly, like that, okay, what do we have here on the level? We can draw the level like that as well. Okay? What do we see here? Ocean Diver? Tested area of supply. So when that happens, it tells us that not only the basing structure is good, bad, but also that the proximal line has been tested. So, but this is not tested on departure. Tested on departure would have been on this candle. This one consolidated away, so it's not on departure. It is tested after consolidating away. So, tested. That means it is weak, even weaker. When that area of imbalance, that impulse, eliminates that area of supply, which was already weak, then it is great to go long there, and that's why this trade was called in the community before price retrace, and some of you took that trade fortunately. Even though if you read the thread, I remember some of you were having doubts about the approach, the location, and all that, but like I always say, it is a new area of demand, bullish engulfing pattern, weekly demand in control, monthly demand in control, a strong impulse, opposing area eliminated, consolidation away. I mean, what else do you want? I mean, what else? Okay, somebody else pulling the trigger for you? That would be nice. Okay, that would be nice, but it's not the way it works. Anwar, he's saying we need to learn to make candles talk, or even better, Anwar, you need to talk to the candles. I mean, you need to read out loud. Okay, read them out loud, and they will talk to you. Otherwise, they will not. Okay, good. All good with this one? Any other questions? Read out loud. I mean, read out loud. I mean, like I'm doing now. You could say like, okay, how do we score? Because usually, as human beings and traders, we are working alone. I believe Andreas is an exception. So you are at home or in front of your trading platform, and you are looking at the charts like this. What am I doing? Nothing. You can't hear yourself. Nobody else can hear you. You're doing nothing. You are talking to yourself. Your brain, your mind A, the rational mind, mind B, the irrational one, or the emotional one, they are arguing, saying, no, no, this is not strong enough. But this area here is tested already. No, I'm going to wait for a bigger rally. No, no, now the arrival. We have 2 ESC candles, 2 bearish engulfing pattern. No, no, I'm not going to. That's the way. No, but then the rational mind says, but it is, let's score it. It scores really great. The location is really great. But the emotional mind will say, no, no, it's not good enough. Oh, I'm going to pay attention to the news. Then you pull up Forest Factory or whatever website you are reading. No, there are interest rates for Hang Seng. They are going to be published overnight. No, no, I want more reason not to take the trade. Come on. Like the Swissie this week or last week, there were some ECB or something. Somebody said in the community, I think it was Andreas. I don't remember. Somebody else said that. And I said, well, they're going to go to hell. Because you are watching the news. You shouldn't be watching the news. And what happened? This happened. Okay, from there to there. This happened. So the trade was missed. So Andreas is saying, yes, I was that. Yes, Swissie, the Fed rate decision. Okay, so it doesn't really matter. Okay, if you are trading the 15-minute imbalances or the charts, okay, you are looking at the 5-minute charts, 15-minute charts, and there is one of those ECB releases or interest rate, then obviously stay away, because the smaller time frames will not be able to fight against such volatility in the markets, and those levels are probably going to be eliminated. But look where we are, okay? In this case, on the Swissie, look where we were. Monthly supply and control, weekly area supply and control, bearish engulfing pattern, very strong area of supply on the daily. So it doesn't really matter. If this was a 5-minute chart, an imbalance on supply on the 5 minutes, obviously forget about it. But you are trading the daily, weekly, monthly balances. It doesn't really matter. Okay? Okay, good. So Hang Seng, long bias. Still room to reach that area of supply that we are expecting that area to be eliminated, but obviously when price reaches that area, usually price will start retracing as it did on the S&P and others. So there's still room to go long, but when that area gains control, no longs will be allowed anymore. Good. So let's now, I was going to look at the daily, at the dollar index, but it's the same thing as the euro dollar. So right now, what is going on here? So the dollar index, remember the euro dollar, we still have a bearish bias, monthly bearish engulfing stronger than the previous bullish impulse, 2 days versus 5, new daily air supply, new 4-hour air supply. If we take a look at the dollar index, DXY, we have the opposite scenario. We have something completely the same thing but upside down. Price did not retrace to this area of supply as it did on the Swissy. Okay, now it's too late. When price reaches that area, it will be too late for shorts. It would have been great now. So we have daily area supply, demand in control. As said, when price was there, no shorts unless price eliminates that area of supply. Okay, weekly area demand in control. Weekly bullish engulfing pattern, stronger than the bearish engulfing. Lot of room for price to rally. So what is the idea here? That area of supply, weak area of supply, has been eliminated by that area here. Okay, that demand. So I always do like that. Red, and that's what we have. A new area of demand on the 4-hour, potentially a new area of demand on the daily for longs. That's the way to go. Okay, so right now we have long bias on the dollar index, we have short bias on the euro dollar, and if we start looking at the dollar cross pairs, what are we gonna see? What do you think we are gonna see if we start looking at the major dollar cross pairs? What do you think? Angmar? Short buy, uptrending, yeah. We're gonna see new areas of supply created on pound dollar, probably on the euro dollar we already have, on the Kiwi dollar probably new areas of supply on the 4-hour and the daily, because the dollar index is rallying strongly with a bigger picture long bias. Okay, so let's take a look at the pound dollar, which is the next one. What do we have right now on the pound dollar? We have weekly area supply after, okay, a very strong impulse. So what are we expecting now? Anyone? What are we expecting now? Do you think price is going to do this? Or price is going to do that? It's going to rally or it's going to drop? It's going to drop to demand. Like as Alf Johansson said and Frederick Wickerpound, yes, that's what we are going to see probably in the next couple of weeks. Okay, it made a high there. Okay, then breakout traders on the lower time frames. I'm sure. I mean, imagine that you are. Let's do this. Imagine you are a scalper. Okay, and you are trading the lower time frames. Let's say you use the minute or well, let's use the 5-minute chart. Okay, let's use the 5-minute chart. Oh my God, so many minutes over there. So it should be over there. Okay, so there are, I mean, uh, I don't know about you, but I know many traders, and I've read about many traders that just, you know, breakout traders. Once the highs are broken, all the resistance is broken, blah blah blah, and they will start buying breakouts to the buy stop limits and the sell stop limits and all that. So they will just, once the high is printed, okay, I'm gonna buy, and then down, loss. Why did I have a loss? Why? Well, they don't even know what an imbalance is. Uh, if they are scalpers or trading intraday, very short term, they won't even look at the weekly chart. That's something that they don't even know that exists. Okay? The closest thing to the weekly chart is the word weekend, where they are expecting to have some fun with friends. Okay? No way. I mean, you have to know where you are. So take a look at the bigger picture and say, okay, now you are a scalper. Great. Good. You know that a weekly area of supply is in control. Now it's time to scalp. In which direction? Long? No. Shorts. You have to scalp on the way down. because we have a weekly area supply and control. So that's the way you could be looking at scalping or shorter term trading when you have a bigger time frame area of supply in control after a very strong impulse. So this strong impulse is helping shorts, it's not helping longs. It's helping long, or it will be helping longs when price is there. But right now, it's telling us that since price has been running for a long time, no more demand is left. All the demand is consumed on the way up. And now the only thing we have is supply left. People interested in getting out of their positions because they are in good profit. Make sense? That's how I look at it. Oh, Ocean Diver, as I look at monthly candle, I love to buy on the close of the Dows and Bull Engulf candle. I used to do that. I used to do that. You no longer do it? Anwar, also monthly demand area in control. He does it. Okay, Ocean Diver said he does that already. Still does it. So Anwar, demand, yes, on the monthly sequence. What do we have in the monthly sequence? Anwar says we have monthly demand in control. Good, great. But it was in control over there. But now, after a very strong impulse, we have another lower time frame sequence, the weekly, that is telling us we are too high in the weekly sequence. And by reading price action, it's telling us that the origin of the move is here, not there. So we have to wait for price for a bigger pullback. So multiple sequences can coexist. So if you are trading the monthly sequence, you should be paying attention to lower sequences like the weekly and the daily. If we have a daily area of supply and control, look at the daily area of supply and control. Is that area supply, or does that area supply score high? Look at that impulse. Super strong. Okay? So do you think that buying for 5-minute imbalances or 5-minute strategies, whatever strategy you're using with overbought, oversold, whatever you're using, Bollinger Band, Pierce, whatever, it is not allowed. It shouldn't. If you are aware of this, and this is also nested within the monthly, weekly area of supply, after a very strong impulse on the weekly as well, no way. Okay? And now you wait for a few days. Okay, I'm going to wait for a few days. And look what we have now. What do we have here? We have 1, 2, 3 bearish engulfing patterns with supply in control in the daily and the weekly. So this is what we are expecting. Drop down there, probably react a little bit, and drop again. Or rally into a potential area of supply, and then from there drop again. Make sense? No, it is Jay. He's asking if that was a set and forget short. Well, you tell me. Anybody can tell me. In order to have a set and forget short on the daily, okay, we need the daily should be or is the anti-time frame for which sequence? Yay? Let's do that step by step. Okay, we have monthly, weekly, daily. What was the trend on the daily? Jay or anybody? Up. So we can go short according to the daily sequence, isn't it? No short. Daily out of alignment. Where can we go short again? At the weekly supply area. Okay? Good. But what is the trend on the weekly? Up. So if the weekly is up, then, and the daily is up, how can you go set and forget short on the daily? You can't. Unless, what? There is one rule that would allow you to take that short. On a monthly, weekly, daily, monthly, weekly, daily and weekly are out of alignment. Do we have monthly? Yeah, at the monthly average supply. Do we have monthly in a downtrend? Do we have that area? Yeah, Anwar says yes. Do we have that area of supply nested within the monthly area of supply? Look here. No. So can we set and forget? No. That's your answer, Jay. Okay. Ocean Diver monthly is consolidating. Correct. Okay, you got your answer, but why didn't you get your answer before, Jay? You got it now. Why? Why didn't you get it? Why didn't he get it? Anwar? Why did he say was he thinking of a valid set and forget short and not why? Let me tell you why. Exactly, yeah. He said that. He also replied to his own question. We have to talk loud while analyzing. Not only that, you have to apply the rules. So rules are very clear. Okay, sequence made of 3 time frames: monthly, weekly, daily. If the daily is out of alignment, you are thinking of going short, okay, of selling. If the daily is out of alignment, where can you go short? A daily average supply, nested, a weekly average supply, isn't it? That's the rule. That's the realignment. If the weekly is out of alignment, then we can still go short, remember, short bias. If the monthly is still down and monthly supply is in control, or the daily area supply, the entry time frame is always the lowest time frame in the sequence, is nested within the monthly area supply. Do we have a monthly area supply here? No. Do we have monthly downtrend? No. So we can't set and forget. It's not allowed. The only outcome of this scenario, of this rationale I am going over, is wait for confirmation. So if you know the rules by heart, I do know them by heart, many of these members know them by heart, then you just have to talk yourself through the rules, ask the questions to every single chart, then you will get an answer for every chart, and the realignment rules will do the rest. Most of the time you will not like the answer, because most of the time will say no, 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 and you will be thinking, where is it going to tell me yes? Well, you have to wait. You have to be very patient. Good. You're welcome, Jay. Good, good, good. So now we have dollar versus Singapore dollar. What do you think this one might be doing according to or based on what we have seen on the euro dollar, pound dollar, and the dollar index? What do you think is happening with the dollar versus the Singapore dollar? Jay saying long bias and we're up. Ocean Diver rally, long bias, up. Frederick, let's take a look. And where is it located? At a bigger time frame area of imbalance? Do you remember it? It's being analyzed in the community a few days ago, or refreshed maybe yesterday or 2 days ago. Weekly demand zone. So let's take a look. There we are, my friends. Monthly uptrend, monthly trendline confluence. Can you score? Anyone? We're not gonna go over the individual scoring pieces like structure, impulse, and all that. What do you think if you had to score this level from 1 to 10? Which score would you give this imbalance? 10, best, 10, 10. So, I mean, you already know that. I mean, so are any of you is long on this area of imbalance? Because everyone is saying 10, 10, 10. Anyone? Frederick saying not yet. So if it is great, why are you not long on that one? I'm just asking, okay? See, he is. He's saying he's long on that one. I know others in the community that are long, like Lion 89, I think, and others. So it is a great area of imbalance. So you should be going long. So you're waiting for a while. It's great. You're waiting, but you also could do this. If this is too wide for you, divide it in 2 pieces, half, and you take the trade there, stop loss there. Or you can even divide it in 3 pieces, in 3 pieces, and you take the lower third. Stop loss always underneath the distal line. Or you wait for a new area of demand. If you wait for a new area of demand for a while, what could happen with these strong levels? What do you think could happen if you wait for new imbalances? No pullback. Exactly, Jay. No pullback. That's what happens usually with great imbalances. When price is consolidating, then you are going to have your retracement to the wows, like on Hang Seng. Where are you, my friend? Over here. You get the wows. Monthly consolidating. Okay? So you get the wow there and you get the wow there. But if the bigger time frame of your sequence is clearly uptrending, usually in forex is more common to have the wows and pulling back and all that, but on stocks it's very unlikely. Okay, it will keep on rallying, rallying, rallying. An exception, well, not many exceptions, no, but remember this one on Herbalife, where we had the wow on the daily, on the weekly, and it's already playing out, still playing out. Okay, that wow, set and forget trade, weekly wow, all this based on 3 months area of demand. So that's another wow for you who asked about the wows. C, I think. I don't know. So we have another wow, but since the 3 months area of demand is in control, which is the time frame? Sorry. What is the anti-time frame for the 3 month sequence? Ocean Diver, the weekly. So we go down to the weekly. Trend line break. Those are the rules. That's a classic wow trade as confirmation of a 3 months area of demand. Okay, so let's take a look again. Let's go back to the dollar versus Singapore dollar, and let me adjust this because I think I changed the time frames all over the place. Okay, good. Well, look what happens. We have daily area of demand, weekly area of demand, trend line confluence, monthly uptrend, weekly uptrend. Even though we have two peaks, this is not a downtrend. In order to have a downtrend, rules are very clear. We require an area of imbalance of demand eliminated. There is no demand here, no demand here, this is no demand. So even though we have two bearish impulses with two peaks, we don't have a downtrend. Okay. Jack Powell is saying that he's long on that one. Great. So now we have a brand area, a new area of demand over there, a little bit weak is being eliminated. Okay, but if you are trading this base, okay, it's weak, but the balance is very strong. I'm gonna take the risk. Would you have had a loss on this one? It was overshot. This is a very aggressive trade. No, you wouldn't, because you should have the stop loss around there, 25%. This is 25, 50, 75, so around over there. We have the wiggle room as the ocean diver said. Okay, so now we have the trend line. We have to adjust the trend line to the latest two peaks. Okay, I believe the higher high was printed. Let me take a look. 35.94, 35.94. No, it hasn't. So if that high is broken, an area of demand will be created there or here, because we could have also a wow here as per the rules. This is a basing candle at the end of the 4 hour. Then we have 1 and 2 ESCs. Okay, then that would be considered a wow as well. Pullback. That's what we are expecting. Okay, so this is a great setup longer term. The basing here is bad. Well, it's good for longs. Why? Because its basing dropped and it couldn't eliminate the opposing areas, and it's happening after a very, very strong bearish impulse. So it's great to hold the trade until there at least. This is not supply, but price will almost for sure start retracing when price reaches that area. Okay, good. Now let's take a look at another one. Euro PLN. Okay, I know some of you are long on this one as well. It was mentioned in the community. Brand new area of demand on the monthly. Can you score this level on the weekly? Is it good or not? Great. super strong imbalance. The impulse is super strong. So you should be long on this one already. Okay? It's responsible for eliminating that area. That was responsible for eliminating this one. So I'm going to delete these ones because this is also a wow. So expecting price to rally all the way up there. This is a very similar scenario to the dollar versus Singapore dollar, a basing structure, basing candle right above a super strong imbalance. This is great for longs. Okay? New area of demand is being created over there, similar to the Singapore dollar imbalance. One sec. No, this is not changing correctly. Okay, similar to this one over here, but on the Euro PLN. Okay. If price continues to rally, we're going to have a daily area of demand as confirmation of monthly and weekly areas of demand. If you are trading the monthly imbalances, monthly sequence, then you should be waiting for a daily area of demand. Not there yet. Okay? If you are trading the weekly sequence, 4 hour is enough because we also have a great area of demand on the weekly chart. Any questions about this one? Why these zones are there, why we are expecting price to rally, and why we should be long already? Price could continue to drop and remove that areas of demand, but we don't know. We do know that it is at a great area of imbalance. It is nested within the monthly area of demand, and we are allowed to go long. That's all we can do. Nothing else. It could be a loss, of course. Okay, good. Let's take a look. Anybody interested in any particular asset, stock, forex, gold? What is your question on gold? I can tell you by heart. Anwar, what are you expecting, or what are you looking to do? Gold. Let's take a look at this one. Gold. What a mess on gold. Yeah, but it's a looks like chaos, but there is order. Okay, as in the universe. It looks like chaotic, but there's no chaos. Okay, good. Where are we on gold? See that? Very strong area of supply. What are we expecting? Price to drop. Are we allowed to go long? No, we are not, Anwar. So longs are out of the way. I mean, no way. No way. Then there are two other options. You go short or you do nothing. So, what do we have here on the weekly? What is the weekly chart telling us? We have balance. But what do we have here? What do we have there? Those two red candles. Correct. Two bearish engulfing patterns with monthly right here. I mean, right there. Look at that. Right there. So we were looking to go short at this area of supply. It is the strongest. So why? I mean, why? Look at that. Look at gold from down there. Very strong impulse. Very strong. Even stronger. Quite strong. Losing steam. Losing steam. And then suddenly we have super strong bearish impulse. Why is this happening here? Why do we have now a super strong bearish impulse instead of stronger bullish impulses as we have seen on the way up? Because we have the monthly area of supply right there. That's why we are having that area of supply created on the daily. Unfortunately, it did not retrace to that area. This was not good because we didn't score high within the bullish engulfing pattern. So now what we could have is a brand new area of supply created there, used up area of demand potentially dropping, and we do have another area of supply here, peak, okay, and another area of supply over there. I'm going to delete those for more. Okay, that's what we have. Let me read Ocean Diver comment. What do you think about weekly EMA, Alfonso? Many times I got scared and skipped the trade because this kind of scenario, which is weekly EMA up, rising, and near the price. Well, but look at this. There are unlimited scenarios. We have the monthly supply zone, and we also have 1 and 2 bearish engulfing patterns. So obviously, the 20 EMA is a confluence that many traders are using. That's why it works, because it's nothing really. And what we have here is that even if we wanted to go short, we cannot go, obviously, short, we can go because of this 20 EMA. But we don't want to go short here. We want to go short there. Make sense? Make sense, Ocean Diver? That's why we want to go short. If price reaches this area, we have demand in control, we can go short. Okay, unless we are using a lower or smaller sequence. Okay, so we can't go short right now. We want to go short if this becomes supply. We wanted to go short there, but price did not retrace. So we have to wait for the imbalances to be created. 20 EMA is an obstacle, confluence. So when price reaches that area, probably will allow us to go short at a potential area of supply. But we have to wait. Make sense? Jack Pal asked something. Could you please talk through EuroCAD, counter trade longs, and strong daily demand and new demand created, possibly longs for our every demand after 3 ESCs? Okay, I'm going to take a look at it. EuroCAD. Remember, EuroCAD is in a downtrend, so this is a counter trend trade. Any questions about this? So, no, Anwar, you were the one suggesting the analysis of gold. So, this is the analysis. Potentially short here, very strong. Near supply being created, but no long set and forget. This is not supply here on the monthly. This is just a bullish impulse. Rallied and no accomplishment. So, confirmation required for longs no matter what. Jay asked, so Alfonso, if we enter at the upper daily supply, then the profit target will be daily demand below? You mean here and the target? Which one? Because this is an area of demand. If we, yeah, well, it depends on what is your, I mean, you should know already, before you take the trade, you should know where you're going to exit. In my case, I exit at 3 times the width of the level. So I don't care about the opposing area. So 3 times out. So could price retrace all the way down there? Yes. Well, look at that. Bullish engulfing pattern, strong bullish impulse. So if you are short about there, you should be getting out around there, which happens to be this daily area of demand. Make sense? That's what I would do if I was holding for longer. Now, with the dollar getting stronger again with weekly and daily areas of demand in control, this is probably helping the gold to drop further. Make sense? So let's take a look at EuroCAD. So I'm going to do this because I want to add this to the list later. Okay, EuroCAD. Sorry. So EuroCAD. We have monthly downtrend. So if you are a trader trading the monthly sequence, you can only go short. That's first thing. Okay? So are there new areas of supply created on the daily? Anyone? So no, you can't go short. So no way shorts. No way longs. Okay? So you are trading the weekly sequence. The weekly is still down with weekly area of supply, weekly at balance, but we have a weekly bullish engulfing pattern and also a monthly, if you're using the monthly sequence, for that supports a potential long if new areas of demand are created, isn't it? So on the weekly sequence, we have the weekly at balance, and potentially will be aligned for longs next week or in 2 weeks' time. We don't know. Okay? But now, what do we need in the weekly sequence in order to go counter trend long? On the weekly sequence, we have the weekly, the daily, and the 4-hour chart. The daily out of alignment. The rules state that in order to go counter trend, we require the middle time frame of your sequence out of alignment. In the weekly sequence, that time frame is the daily. Do we have daily out of alignment? Yes, we do. Out of alignment means new area of demand created, and we don't necessarily need an uptrend. Okay, we just need new demand created, like this one. Okay, so we had demand created, but we didn't have an uptrend because we didn't have a trend line like that. Okay, or two opposing areas of supply eliminated. So that's an area of demand, valid area of demand over here. This is the entry for counter trend long because we require the daily out of alignment. That was a 4-hour area of demand here. Daily area of demand played out really nicely. That was a 4-hour area of demand. Wow long, price did not retrace. So we do have now the daily in an uptrend after eliminating this area of supply. So on the monthly sequence, counter trend longs would be possible because we have a daily uptrend and the daily getting out of alignment with support of two high time frame engulfing patterns. That gives us the ability or green light to go long counter trend if you are a counter trend trader. Else, like on euro dollar, if you are a trend trader with a monthly bearish bias and all that, you are not allowed to go long. You are allowed to go short only. Okay, but in this case, we have on the EuroCAD price trying to react to that area. Okay, so what is the trend on the 4-hour right now? Is it up? Is it consolidating? Uptrend. So we have the weekly trying to consolidate. It's like we don't know where it is. The daily, up. 4-hour, up. So if the 4 hours up, where do we go long? Is that a valid setup? Jack Pal? Jay? That's the setup. So now, but before taking the setup, we have to do all this. But now, before pulling the trigger, what else do we need to do with this level? Before pulling the trigger. There's one thing, the mandatory thing we have to do no matter what. Which is what? Consolidation will happen, but that's not something we have to do. That's one of the scoring enhancers. We have to score the level. We have to score it. So, basing structure. Well, great. Only 4 candles. Departure. Great. Consolidation away. Great. Fresh. Great. Original as well, because it is not a reaction to a previous one. So no matter how you look at this level, it scores the highest. Super strong. So you should be long on this one already. Okay, already 1-to-1. So if you are a little bit worried because it's a counter trend, you could be more aggressive and move your stop loss to your entry, or maybe move the stop loss from here to half, so you are only risking half, or maybe only 25% of your initial risk. It is too late already, Jack Pal. It is too late. You're already rallying. So if you buy here, because the problem is here. If you buy right now, Jack Pal, where should you place your stop loss? Because if you place it here, price could do like this, out of the way, go out, and then start running again, and you would be knocking your head against the wall. So your stop loss, as per the rule, should be there. So that's the entry. The entry is like this. It almost has one-to-one. Since this is a counter-trend trade, you could have in your trading plan, well, in counter-trend trades, I'm going to be a little bit more aggressive managing my stop loss, my entries, because it is a counter-trend trade. Okay, it has room to reach at least that bearish impulse, which is not supply because it didn't eliminate any opposing imbalance or broke the trend line. Make sense? Good. It could be a loss. Remember, it's counter trend. But right now, managing the stop loss aggressively would be a nice idea if you already are long on this one. Okay? Good. Any other asset, forex or stock you want to analyze? We have time for one more, almost 10:30, but we have time for more. One more. Okay? Let's take a look. Nima is asking for euro versus the Swissy. Never traded that one. Will never do. We'll never trade that one because it's highly correlated and it was pegged and caused lots of problems in the past. But let's take a look. Have time for this? Come on. There it is. I'm going to use Oanda. And I'm going to add it here after EUCAT. Okay, good. So let's see what euro. So right now, what do we have on the monthly? Demand in control, plus bullish engulfing pattern. So shorts are not allowed in the monthly sequence. Only longs, counter trend, remember, counter trend in the monthly sequence. If new areas of demand are created on the daily. Are new areas of demand created on the daily? Oh yes, we do have one. That one over there. Retrace that area and then rally. And now we have another area of demand created there. Pretty strong. So my question is, can we go long on this one? We are talking about the monthly sequence. Anwar saying long with confirmation. Alf Johansson saying no. Why no, Alf? Frederick said weekly supply is in control. Jay says that the trend line will be broken by the time price reaches the demand. Correct. Monthly down. Correct. So even though we have the monthly area of demand, we have bearish buys on the monthly. But not only that, look at that. We have also, what's going on here? The weekly area of supply in control. Okay? And look at that. Pink spinning tops. This is the picture of, you see this? Drop, spinning tops, rally. This is a morning star. Okay. What are we seeing here? Can you finish my painting? What do you think is going to happen? This is going to happen. Most likely. It's not going to happen. It's most probably going to happen. Okay? So that's what's going to, what we think is going to happen according to price action, because we have monthly bearish bias, supply and control on the weekly. So if we have supply and control on the weekly and we use the weekly sequence, what is the way to go? To infinity and beyond, Ocean Diver said. Shorts, if we are at which time frame? On which time frame? And what? We have weekly, daily, H4. So shouldn't we be looking for shorts on new areas of supply on the 4-hour? That's the way to go as per the rules. So who asked about this one? Nima, are you short on this one or looking to go short, Nima? Let's take a look at the 4-hour and see if we have anything. Andreas, asking something. If you still have a couple of minutes after the analysis, could you please elaborate a bit about fell ERC RNOCPs, like the candle from September 6 in Euro CC by Euro CC? Which time frame? Andreas? Daily, daily. September 6, September 6, 6 September. This one over here. That one over there, I guess. Okay, I'm going to take a look. But that's not a failed ERC. Because a failed ERC needs to have a very important, characteristic. What is that? It has to look like an ERC. Does this candle look like an ERC? Andreas? It has to have a wide body, candlestick body. So it doesn't. It is not a failed ERC. Then it's not possible. No, it's not a failed ERC. A failed one. It's but what do you mean? What do you mean a failed one? Failed one imbalance or failed ERC? So let me do this because I have the indicator. I believe I'm running a new indicator I'm testing and building, which is this one, basing candles. So I'm going to use the multiplier instead of 0.8. I'm going to use 1 so I can see failed ERC because right now it's filtering the failed ERCs. No, it's not showing any. Okay, good. I'm going to switch it back to 0.8. Sec. Let me read. 12 August failed ERC on the daily. On the daily, Ocean Diver. 12 August. 12 August. That one over here. Yeah. Yeah. You see that one? You see the dot here is hidden by the indicator. Oh, that's no, but that is not a failed ERC. 12 August. That one probably a failed ERC, but the indicator is not showing it. So because I'm filtering it. Let me see because a failed ERC should look like this or like this with wider wicks upper and lower. So the resulting formula will calculate that the distance from the open and to the close is smaller than the distance to the high and the low. So, but if you remove the wicks, it has to look like a failed ERC. Okay, it has to look like that, but it is not looking like that. This one is not. This one, it's like a bearish pink candle with a small body. It cannot be a failed ERC because a failed ERC, by definition, it should have the looks of an ERC. It should be an ERC with wider wicks that make the candle a 50% candle. But it is not a pause. It is just an ERC that looks like a pause, but it is not. So Nima said something, but the supply level looks like does not consolidate away. But which supply level are you referring to? On which time frame? Which supply level? I don't know which one you are referring to, Nima. So here we are. Let's take a look at the 4-hour. Let's do this. I'm going to sync these to all charts. So we can see the weekly area supply is right there, okay? So the weekly area supply was reached, okay? Rallied, and then here we have a valley, another valley. That's what we have, okay? Then, this is supply, this is demand. That's what we have, okay? So, is this demand? It is not demand because it doesn't eliminate anything, but here, over there, we have that area supply. Weak because we don't have We have consolidation wave, but no 2 to 1, no 2 ERCs, and tricky price action. But price is reacting to this bearish impulse. So my question is, I'm going to remove this. Is this supply or not? Anyone? Nima, he asked, or Jack Pal, or Andreas, or anyone, Ocean Diva, anyone on the chat room. Is that supply or not? Is this a valid area of supply to trade or not? Yes. Why? Anwar said yes. Frederick said yes. Everybody said yes. Broken trend line. So I guess you are referring to this trend line, isn't it? So what do we have here? A brand new area of supply, more than 2 to 1, very strong impulse, and accomplish the break of the trend line. So that's your trade. Based on what? On the weekly area supply. It is too high. Okay? Weekly supply and control, bullish pink candle, creating the spinning tops, expecting price to drop. Okay? With used up area of demand tested 3 times, 4 times, expecting that to be eliminated. So that's a valid area of supply. This is another wow example. Okay, bearish engulfing pattern, very strong departure, bearish ERC, bearish ERC. Okay, engulfing, perfect setup. And no higher high. Okay, good. Engulfing pattern confluence, weekly supply confluence. So everything pointing short. So we had already the bigger retracement, monthly demand control, but bearish bias. Where did price retrace? It retraced to the weekly area of supply we have right there. Make sense? So Manwar asking, so based on monthly, weekly, daily sequence, we should go long. No, we should go short. Why long? Monthly bearish bias. We have demand in control, but against the trend. So the bigger picture is bearish. And we have supply in control in the weekly as well. So no long. No long. Longs would be counter trends. We have weekly wow long, daily area of demand, another daily area of demand, but by the time price reaches that daily area of demand, the daily trend line will be broken. So no longs allowed there, only in confirmation for counter trend longs. Again, okay? So the bias on the top time frame of your sequence should dictate what you're going to do. That's all. Monthly consolidating probably, Jay, he's asking, because I have the bearish trend line like that, dotted, so it should be sort of consolidating. 3 month supply and control, brand new area of supply on the monthly. So according to the monthly, to the 3 month sequence, we should go short and new areas of supply on the weekly and the monthly. So we have new areas of supply there, there, there. So, but we have consolidation because the supply is here. Supply, new supply created, and this is demand after breaking. This demand is there because of this. Trend line like that. Okay. So bearish bias, not a downtrend. Here, same thing. Bullish bias, rallying, but not an uptrend because it didn't remove anything. It reached the proximal line of the 3 months area of supply. Let me show you 3 months area of supply. All-time lows broken. 3 months supply in control. Bearish engulfing pattern on the 3 months, dropping where to the strong bullish impulse on the 3 months. But this is not demand. This is just an impulse. It happens to have a monthly area of demand in control, which is why we are having now a monthly bullish engulfing pattern and brand new areas of demand on the weekly. By now, we reach a weekly area of supply, and according to the weekly sequence, we are allowed to go short an area of supply. There you have an area of supply on the entry time frame of the weekly sequence. So it all depends on your sequence. You are trading a bigger time frame sequence, so you have to wait for daily areas of supply. You are trading a lower time frame sequence of the weekly. You have to wait for new areas, smaller time frame areas of supply, like the 4 hour. You are trading a 6 month sequence. You have to wait for monthly areas of demand or supply. So it all depends on that, on the sequence. But my recommendation, as I always say, do not trade multiple sequences in the same account. Use or create a new account for every sequence or difference for every single sequence that you are trading. Otherwise, you're going to mix results, and probably the smaller sequences that traded in smaller sequences will affect the outcome of the bigger time frame sequences. Okay? So I believe that's everything for today. Okay? Unless you have a question about this, I'm going to close the chart. Thank you everyone for attending, and we'll be uploading this webinar if the recording has been successfully recorded. Okay? Jack Pal asking about Starbucks. Okay, one sec, rapidly. I don't think you can go long on that one. Overextended after a very strong rally. No, waiting for a Starbucks longs and monthly area of demand in the monthly sequence. On the 3-month sequence, wow. Well, you know what I'm going to say. What am I going to say, everyone? 3-month chart. Thank you, Ocean Diver. Retracement. So if you go long on the monthly, weekly, it will probably work for some time, but we are expecting price to drop. A strong bearish bullish impulse, 1, 2, 3, 4 ESC candles. Shooting star, bearish pink candle, engulfing pattern at the end of the year, probably. We don't know. Still 2 months left. But this is, I mean, quite obvious that price is going to drop all the way down there. And if we take a look at Valero, okay, that's what happened on the 6-month chart as well. See? Dropped. But well, I could go on and on and on and on, but it's not a good idea. I could spend hours and hours analyzing the markets. It's just infinite. Enjoy the night. We'll be in touch in the community. Look forward to seeing you on the next one. Have a good night. Bye bye. Thank you.